You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is Interview Tuesday once again on the network. Time for our Options Insider Radio program, the program where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting OptionsInsider.com. Reminding you, if you like what you hear, this show, anything else we do here on the network throughout the week, keep rating and reviewing. It really does help the legion of new additions to the options market, and they are plenty out there these days. Discover the content and find a path to particularly some of our educational content, Education Wednesday these days. Very important for those new additions to the network. But of course, we have shows hitting you pretty much a couple of times a day here on the network, close to a dozen programs now. So if you like what you hear, this show, anything else we're doing here on the network, keep rating and reviewing. It really does help the new folks discover all the content. Of course, keep those questions and comments coming too. We do love to hear from all of you out there. Let's see who we're hearing from on the Options Insider Radio program today. I'm pleased to be joined by a newcomer to the show and indeed to the network. He is David Cross, the head of sales and business development for Dash Financial Technologies. David, welcome to the Options Insider Radio program.
Mark, it's a pleasure. Thanks for having me, and I'm glad to be here.
And David, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the options and derivative space, as well as what it is you do day-to-day over there at Dash.
Sure, happy to. I'm a managing director at Dash Financial Technologies, and I'm responsible for our execution services businesses, so on the options and equity side, and also our technology platform businesses. And, what does that mean day to day? I work hand in glove with our great team and on the sales and business development side, really servicing our client base. And we cover a lot of different types of clients at Dash, whether it's large global investment banks, broker-dealers of all shapes and sizes, asset managers, prop trading firms, market making firms, do a lot of technology work with several of the exchanges. So, a really wide client base that we touch every single day. I think gives us a great, unique position, in the marketplace, working with so many different types of clients and participants. It gives us a great insight to a lot of the technology requirements that our clients need and, the industry needs to operate day to day. And just a little bit about my background. I've been in the capital markets technology space, more or less my entire career. I was lucky enough to have an internship in college, which really piqued my interest in the capital markets. It was an interest that turned into a job. And following graduation, I had the opportunity to learn, a little bit about options at relatively an early age. Somewhat unlike some of your participants who are veterans of the derivatives trading space and grew up trading options on the exchange trading floors. I was a little bit later in the game and kind of got my career started in 2003. And that was kind of, right about the same time that, the ISC had kind of just launched their first, electronic options exchange. And in any event, traded a decent amount of equity and index options over the phone. And while it wasn't on the floor, there was still some yelling and screaming, which was exciting. And nothing like before, but it's definitely evolved to kind of where we're at today with the electronic marketplace. And fast forward several years, traded a lot of options at a capital management firm based in Chicago. Started trading more and more options electronically. And I'd say around 2007, 2008, transitioned to working for a financial technology firm based in Chicago, designing and selling options technology products. Previously, I was a customer of the firm, and that's where I started the relationship with the Liquid Point team. And they were an early pioneer in the electronic options technology space, and this is really where I kind of I'd say turned into a bit of a capital markets technology junkie. And fast forward several years, part of the Liquid Point team that transitioned as part of the Dash merger back in 2017, and really the last 4 years has flown by. It's been extremely exciting times and building a lot of new cutting edge technology that we've built over the last several years to really keep ahead of the growing business that constantly continues to change each and every day. So it's a little bit of a background on my career and kind of what I spend most of my time focusing on at Dash.
Speaking of the growing business and the challenges therein, we've seen pretty much both of those in equal measure over the course of the past year and change out there. It's been a little while since we checked in at Dash. It was back in October of last year, I do believe. So right in the run-up to the election, of course, immediately prior to that, we saw the meltdown in the markets, the explosion in volatility as a result of the pandemic and all the subsequent action we've seen out there in the markets. Of course, since that last appearance in October, we've had the election and then the mad dash up, you can call it, out there in the broad markets. And then coming into 2021, of course, we've seen additional legs, additional wrinkles. We thought 2020 was going to be the end of the unprecedented, unanticipated things. 2021 was going to be a quiet, less tumultuous year. So far, it's proving to be anything but. We have the rise of the meme stocks, 1,000% implied volatility, all this other madness going on as the markets continue to lurch toward new all-time highs. So for a firm like yours, David, that has fingers in many different options pies, it's been, I'm sure, an interesting and indeed a challenging year and a half, really, since all this kicked off back in January and February of last year. So walk our listeners through that a little bit. What are some of the challenges you guys have been facing over there? And what are some of the interesting and unique opportunities you've seen as a result of these just incredibly unprecedented markets we're all living through?
Yeah, absolutely. I think you kind of highlighted some of, what's gone on in the last 18 months or so. And I think, many folks didn't think that we would see a repeat, of volumes and volatility to what we saw last year. And clearly the first quarter doesn't seem to see that things are backing off, with volatility and volumes in Q1 as a follow through. Now, things have definitely calmed down a little bit, in the month of April. You see volatility come in a little bit. You see volumes come in a little bit. So things have backed off. However, yet, over the last 2 weeks, we've seen, some of the technology stuff that you talked about in terms of the upside momentum and a lot of these names, things have started to back off a little bit. We've seen volatility, definitely expand a little bit over the last week or two. And, you're starting to see those average daily volumes pick up a little bit. So, I think, what we've seen is definitely some follow through. And in terms of, challenges and opportunities, I think some of what we've seen, as a result of the pandemic and being forced to, working from home and, exchange trading floors being closed, and, people have definitely become more reliant upon, electronic tools for sure, partly out of necessity, just in the environment that we've been in over the last year. So we're definitely seeing clients get more comfortable utilizing more and more sophisticated, I'd say, algos, execution strategies, whatnot. And, I think that's, created a number of great opportunities for clients to find, new technologies to, improve their execution alpha and find, augmented liquidity, price discovery. There's a lot of great opportunities that has come out of the last 18 months in the new regime, the new environment that we've all lived through.
It's been fascinating to watch all this. Maybe it's the old floor-based market maker / cynic in me, but when everything went fully electronic for the first time in the middle of the sell-off last year, I thought this was going to be just a period of just disaster for the options market. We're going to see outages. We're going to see downtime, bad prints, bad quotes, all of those things that we've heard whispers and rumors about in the past whenever the switch finally got flipped. But it turned out we didn't see that. In fact, we saw the polar opposite. We saw not just the markets continuing to survive, but also to thrive, really, as they did record volumes month after month. Now, of course, with the news last week, CME pretty much bidding adieu to the rest of its pit traded products outside of Eurodollars. Now we're really facing this fully electronic future more readily than perhaps ever before. So I'm curious for you, David, you've been around this space for a while. You've been on the execution side, the technology side. Were you like me? Were you cynical when everything switched fully electronic for the first time last year? Or were you perhaps expecting what we got, which was the markets being more resilient and being able to process not just the normal amount of volume, but record amounts of volume month after month?
Yeah, no, I think everybody, myself included, was a little skeptical about people having to, execute large multi-leg complex transactions that typically, took place on the floors for certain products. I think everybody was a little skeptical. And, I think, had you have said, we were going to trade these products in a fully electronic capacity, 3 years ago, people would have looked at you and laughed and kind of scoffed. Now, clearly, we saw that there were some growing pains in the first days, and I'll never forget, there was countless hours training a lot of users and participants on how to trade these complex structures electronically. And fast forward 2, 3, 4 weeks down the road, people started to get a little bit more comfortable with that. I think that's a true testament to the technology evolutions that are in place today, and also the resiliency of this marketplace. So I think there's been technology evolution. There's been great amounts of education, within, the community, whether it's market participants that are sending orders, brokers that are executing orders, and technology firms. So I think, the market has been very resilient, amidst, very challenging times. And I think that's a true testament to, what's gone on in this industry over the last 15 years and where we're going, moving forward. I think through, ongoing education and continuing to develop new technologies and tools, I think the industry is moving in the right direction.
I've had a few different vendor firms out here over the course of the past year, and especially over the last 6 or so months, where we've seen really coming into 2021, a new regime of challenges and unprecedented things happening. Of course, the rise of the GameStops and the memes. And it's been fascinating talking to different firms saying, the environment for stress testing these things now and looking at things from a risk perspective has changed markedly, even over the course of the past 6 months. Whoever came into the year of 2021 thinking you had to stress test a basket of seemingly unrelated names like AMC and GameStop and SLV and all these other names that no one ever thought about before, let alone that some of these names would reach absurd levels like 1,000% implied volatility. So yet again, these unprecedented things happening that make it extremely challenging from a risk surveillance, from an overall risk management perspective. I know Dash has fingers in those pies as well, David. So I'm curious for you guys over there as you're trying to develop and implement the systems to monitor all of this craziness. How challenging has that been for you guys, and what tweaks, what maybe unprecedented changes did you have to make to keep up with these insane markets?
Yeah, absolutely. You kind of hit on some of the significant moves, some of the single stocks that we definitely have seen. And, from our seat, we're providing technology to participants, whether it's in the institutional space, the retail space. And, we have clients that lean on us for our technology. And part of that is some of our risk management tools and delivering, our clients in the broker dealer space, market access controls that allow them to have, all the 15C35 checks that are required as a broker dealer executing orders on behalf of participants. When you have stocks that are moving, not just, 3 to 5% a day, but, in multiples of that, order sizes and volumes are significantly inflated. You have these types of risk controls that are getting triggered on an intraday basis. It's far more race than what any of us have ever seen before. So the ability to have those risk checks in place, but also the ability for monitoring, so when there's going to be an issue, whether it's usage on a notional basis prior to having an order that's actually rejected. So we built a whole new suite of tools. We refer to them as Dash 360 Risk that really allow our broker dealer clients a real-time suite of tools to administer all their market access requirements, to surveil for risk breaches, and to be able to react to risk events in real time, to increase limits for clients, so that their trading behavior is not interrupted during the course of the day based upon not being able to increase the limit in a timely fashion. So those types of tools have been really important to our clients, especially in extremely volatile times that we've seen.
I have to imagine the sales for the risk systems a little bit easier in light of what we've seen recently, Dave. I got to imagine a few more firms, maybe in the past, they were a little bit reticent. They didn't want to pick up the phone. I'm guessing now they're calling you, David, in light of what we've seen over the past 6 months.
Yeah, absolutely. I mean, we've had a lot of these tools and technologies in place for quite some time, but I think what we're really seeing now is just, creating the next wave, the next generation of these tools that are much more user-friendly, real-time, the ability for the appropriate risk managers to adjust these in real time, having the appropriate risk logs to monitor usage, to be able to kind of see, these types of clients are, historically on a quarterly basis traded X amount of notional or X amount of, contracts or shares, to make sure that there's appropriate risk limits in place. And when something needs to be adjusted, the ability to do that. So that's, a big part of what we really focus on. And you're absolutely correct. We're definitely getting a lot more inbound calls than we have for these types of tools in the past.
Well, you've mentioned kind of what's been going on in the industry, and from a volume perspective, we are, of course, hot off the heels of the big virtual this year, but still the big options industry conference. We've had a lot of guests coming on who participated in the conference in some way, shape, or form. You just came off the Market Outlook panel not too long ago, so I'm sure a fascinating one. A lot of people were glued to that one because a lot of people have questions about what's going on out there and what to look forward to. So what were some of the interesting takeaways and discussion points on that panel, David?
Yeah, absolutely. I mean, I think, everybody was really, kind of keen to talk about, not just, the year that we just had, but, where are we going from here? And I think, clearly, as we talked about just a few moments ago, that we've seen continued follow through in the first quarter and in the last, 2 months, things have continued. But I think, in terms of some of the key themes, I think the common consensus is that we have a whole new, demographic of, market participants that have now gotten much more comfortable trading listed options for a number of reasons. Again, all the great educational programs, the folks at OIC, at SIFMA, people such as yourself that are putting out great educational programs, the combination of, technology, the reduction in transaction costs, that's really brought in a whole new demographic, of market participants that are more comfortable trading listed options. So, I think that whenever the next unknown happens, whatever it is and whenever it is, there's just, that many more folks that are going to be, trading listed options. And so I think that's some of the themes that, that we're taking away. No doubt that there's a number of kind of macro and micro themes that have the ability to kind of impact, volumes, in volatility on a going forward basis. You mentioned some of the retail, meme stocks. That seems like it's calmed down a little bit. Although, the last week or two, we're starting to see some volatility pick up in some of those sectors. The return to normalcy, like what impact is that going to have? As more and more people get out from behind the computer back into an office, what will that have? More people attending sporting events in real time. What does that have the ability to change with what we've seen over the last 12 to 18 months that people have been, quarantined and whatnot. So, I think we're going to continue to see an awful lot of follow through, in the balance of the second half of the year here heading into year end.
Interesting. That's kind of been the $1 million question that everyone's had on the network these days is, of course, end of 2020, we saw record unprecedented levels of volume. People thought it might peter out. Turns out 2021, even more aggressive on the volume front, at least so far. January, then February, and then March, all setting new records, pretty much the most active quarter in the history of the business. March, the most active month. In fact, I think it goes March, then January, then February, number 1, number 2, number 3. You throw decent in there, it's number 4. So you effectively have almost a linear progression month to month of new record highs. The number is just out for April, the most active April ever, but also not the most active month. But of course, if you want to parse the numbers, a few less trading days in there as well. So some other factors at work to mitigate April there a little bit, but still very robust volume. It sounds like, David, from what you're saying there, the takeaway from the panel on this $1 million question is they think this party is going to continue. They think the volume is going to stay around. It wasn't just a brief flirtation with options during the pandemic and then it's gone, David.
No, I think that's the absolute consensus. Definitely there's a big aspect of the retail trade, but I think clearly it's more than just the retail trade. There's a lot of folks in the institutional community that are trading listed options outside just the retail community. That's a big part of it for sure. But whether it's people that are leveraging systematic volatility types of selling strategies or systematic hedging programs, you've seen a handful of new products that have been brought from the OTC or structured note market to the listed environment. With these a lot of these buffered types of products. So it's more than just a retail trade. There's more active participation coming from the institutional space as well. And, I think everybody, whether it's in the retail side or in the institutional side, there's been, fantastic technology. The experience has been quite great for all these new participants. So hopefully that will keep people coming back to the listed market.
Speaking of those new participants, one of the other big takeaways that a lot of people have been discussing in the wake of the options industry conference is, of course, as you just mentioned, the explosion of volume on the retail side. Some people thinking, maybe people getting a little bit ahead of themselves with some of this volume. It's obviously great to have more people out there trading options. That's a good thing for most people involved. But some people are starting to get a little bit concerned in the industry that perhaps some of the newer entrants to the space, the newer brokers, the Robinhoods, the Webull, and others who have very much focused on a very specific type of clientele, perhaps they've gone too far in making options. It's hard to say too accessible because you never want to think options as being inaccessible, but perhaps have opened the door to options without all of the other commensurate things that you'd like to see go along with it, the education, the risk management instruction, and not putting these traditional gates and tools and educational hurdles in place for people to get them up to speed before they're out there slinging options at, let's say, a level 3. It's easier than ever to get approved for level 3 now. You just hit a few buttons on a website or in an app, and next thing you know, you pretty much have the keys to the options kingdom, whether you really should have them or not. So a lot of people are bringing up the prospect of perhaps we need as an industry to revisit that approach, that old school level 1, level 2, level 3 approach, maybe looking a little bit dated in light of the recent volume resurgence out there. We had some guests recently suggesting things like perhaps we add more levels to it. We go beyond 3, maybe up to 5 or 6, whatever those would entail. Perhaps you add a few more gates to that. So if they want to qualify for level 3, they have to do something basic, like pass a very basic options quiz, something along those lines that could at least put a few more barriers between the person, signing up for the account, getting level 3, and then diving right in to the markets. I know brokers don't like to traditionally do that. They want to make the process as seamless and as open as possible, make it as easy for people to trade, but perhaps the question is, as an industry, should we perhaps be looking a little bit differently? I know, Dash, you guys touched that flow in a lot of different ways in the space. So I'm curious for you, David, and the team at Dash. Is this something you guys are considering? You're starting to hear this from other clients out there and firms that you work with? Or is this pretty much the golden goose and we shouldn't do anything to slow it down?
No, I think ongoing education and evaluation of all the participants, not just the retail space, but institutional space as well. I think that those always need to continue to evolve. I think, like I mentioned earlier, there's been several organizations that have done a fantastic job, making education available in a lot of different forums. Whether it's not just conferences, it's online content. There's been a tremendous amount of education, focused, and I think you do bring some good ideas into, where does it need to go, beyond the current state and where it's at today. Whether that's additional levels of certifications to allow retail traders or institutional users to make sure that they really understand the risk that they are putting on. And I think that's upon all of us. We want users to have a good experience. We don't want somebody to make an uneducated decision because they don't understand the risk that they're putting on the marketplace, have a bad experience, and not come back to the listed space. So I think there's a number of advocacy groups, number of educational groups that have spent a tremendous amount of time. And that education effort, it's not going to stop. I think it's consistent and it needs to continue to evolve for sure.
Yes, I think we can all get behind more education out there as people are slinging options hot and heavy. Speaking of slinging things, I'd be remiss, David, if I didn't at least ask you about the other hot asset class that everyone seems to be obsessed with these days. Of course, I'm talking about crypto. I know you hang your hat mostly in the listed options world, but crypto becoming a bigger part of the conversation. Doesn't matter who you're talking to these days or what you're talking about. It seems like the conversation eventually pivots to crypto in some way, shape, or form. Of course, you have Bitcoin skyrocketing over the course of early 2021. Others like ETH catching up now just in the past couple of weeks. We have, shall we say, more esoteric products like Doge coming hot on the scene and then falling off and then coming back again. So it's been quite the wild ride. I'm curious for you, David, and the team over there at Dash. Is crypto an asset class you guys are watching, and are you planning to maybe incorporate more offerings for that space down the road?
Yeah, I mean, at the end of the day, we're a financial technology firm. And so, while we've been very focused on, listed equities and options, that's really been our bread and butter. Again, as a financial technology firm, we're always looking at, products that people are actively trading, and where there's a technology need or where there's a workflow solution that's required to constantly be watching these products as they become more institutionalized. I think there's been an awful lot of progress that's been made, with education, with institutionalization. You're seeing a lot of these larger custodians get involved, and I think the product is coming off a long way in terms of a lot of the digital currencies, that have come on the scene over the last several years. So we're absolutely actively watching these things, because I think, look, a lot of the technology that we've built to service our options and equity clients at some point down the road could be portable to other asset classes. So we're keeping an eye on what's going on in the developments for sure.
Well, David, that music means we've come to the end of our little sojourn here on the Options Insider radio program. But before we go, we like to leave our audience wanting more, David. So perhaps you want to leave our audience with a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys over there at Dash. Now is the time, sir. The floor is yours.
Absolutely. Look, we're a financial technology firm. I talked about some of the new technologies that we're working on. One thing I didn't bring up is the Dash OMS. And that's basically, a platform that we have rebuilt over the last 2 years, replacing a legacy platform that's been in the marketplace, used by a lot of our clients over the last 10 years. And we're super excited about going live with our new OMS product here in Q2. And you'll definitely be hearing more from the team at Dash on the Dash OMS in the future. So we look forward to talking about that with all the users.
And David, if folks want to kick the tires and light the fires for themselves over there at Dash, where should they go? What should they do?
They can definitely pick up the phone and call any of us on the sales team at Dash. And you can reach out to the team at sales@dashfinancialtechnologies.com. And we look forward to having conversations with all of our participants.
There you go. And of course, you can always follow them over there on the old Twitters as well at Dash Financial, all one word. And of course, stay tuned. A lot more than just interviews here on the network coming back at you tomorrow. Education Wednesday, your double dose of Options Playbook Radio and Options Bootcamp. Thursday, back again for episode 2 of the Option Block. And of course, this week in Futures Options. Friday, Volatility Views. Then it all kicks off again next Monday with the Option Block and the Crypto Rundown, all the way through to another interview Tuesday. Another episode of Options Insider Radio.
Listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.